Hi, I welcome all of you to the 11th study room. Today we take on the topic income tax due for the 6th semester BCOM student Bangalore University, and topic is income from other sources. First, I'm glad directly get into the topic income from other sources. As we know that we have the five types of income: income from salary, income from business or profession, income from house property, and income from long-term capital gains and short-term capital gains, and finally income from other sources. What is this income from other sources? Is the fifth and last head of income. As the name suggests, it is the income chargeable to tax, which is earned through other source of activities or performing an irregular activity. Is the income earned other than the epicenter of their or individual income sources. So this is the meaning for income from other sources. By the meaning, I can explain the meaning with a short example. The A worker is employed in a B company. Is anything received from B company is considered as a salary and it is chargeable under the income from salary, under the head income from salary. But if he doing a work for another company by employing in B company, then he receive from that another company, example of D company. If you receive anything from the D company in the form of fees, commission, or brokerage charges, or anything may be, it will be considered as income from other sources for that employee other than what is getting from the primary employer called B company. So I can conclude this example for this meaning for income from other sources. Let me look into the examples. Income from guest lectures, salary or pension received by an MLA, MP and MLC. I want to give an example. I want to explain it briefly. Why salary to the MLA and MLC or MP is considered as income from other sources. You can say that it can be charged under the head of income under income from salary, but it cannot be happen because for an employee it's fixed that until and unless he work under an employer, he will get his salary. So it can be charged and it is a fixed charge and it can be charged under the head of income from salary. But for MLA, MP and MLC it can't be happen because the working tenure will be 5 years. If they are re-elected by the people and sent to the assembly or the parliament or the legislative council, then their period will be extended. It is not a permanent source of income for them. It's a short period of income for them. So it cannot be termed or included under the head of income from salary for them. It is the income from other sources. As serving the people is considered as a social service, being in a political party or anywhere. It is not a fixed or a permanent salary for that those MLA or MP and MLC. It is for the salary fixed for the tenure of 5 years. If he re-elected, he will continue with the salary or as the salary will be dropped and he no more getting any salary or benefit from the government or the or for his position as ex-MLA or ex-MP or ex-MLC, so that salary for any MLA, MP and MLC is considered as income from other sources. Next, fees, commission and remuneration received by an employee from other than his employer. Already given the example for explain the meaning of income from other sources. If a worker is getting anything from his own employer, like means he is working in B company, then is anything he is receiving from the B company, it will be considered as income from salary for the at worker. Other than that, he receive anything else from other company for rendering his service, that will be considered or chargeable under the head of income from other sources. Okay, next example, gift received. So we in the income tax we have the certain limit for the gift received or certain exemption for the gift received by anybody. So after the limitation, what is the limit given by the government is anything receiving more than that limit amounts, it will be considered more amount it will be considered as the income from other sources, and it will be under the head of income from other sources. Agricultural income, land situated outside India. So as we know that any agricultural income is exempt from the tax in India. But if a farmer having a land outside the geographical boundary of our country, and he is doing a agriculture there and is anything earning from that land through agriculture, it will be considered as or charged under the tax under the income from other sources. Okay. By this, are the some examples or these are the some example for income from other sources, and this theory can be referred by 6th semester BBS students of Bangalore University. So let me see some more examples as quick as so. Some other examples of income from other sources. Income from undisclosed sources. Anything undisclosed sources as they like anything land or property and is not disclosed anywhere in his accounts or in its individualities, that anything income earned from that it is considered as income from other sources. Interest from foreign securities, rent from letting vacant plot, dividends from mutual funds companies, etc., interest on bank deposits, insurance commission received, family pension, director fees, casual income, royalty received by the owner of an asset. These are the some of the example for income from other sources. And next we move on. This table is very important while we are doing the problems under the income from other sources. So first table, government securities. So in that there is a two category, tax-free government securities and less tax government securities. For tax-free government securities, we want to fully exempt that portion. If anything come under income from other sources and coming under the securities, it will be under the government security, that is fully tax-free means it should be fully exempted. And the second portion is less tax government securities. Under this case, what happened? It is fully taxable without deducting TDS. TDS means tax deducted at source. No grossing up will be done here. Okay, this is the treatment we want to be careful while doing the problem for the government securities. And next part is commercial securities. In the commercial securities also there will be two parts. One is tax-free commercial securities and less tax commercial securities. In the tax-free commercial securities there is a clause, always to be grossed up. Anything amount it's given, it's always to be grossed up, or either rate of interest is given or interest amount is given. ಎರಡು ತರ ಆಗುತ್ತೆ. Grossed up ಮಾಡಲೇಬೇಕು. We want to do the gross up when tax-free commercial securities are there. Either for the rate of interest is given or rate of amount is given. Anything may be given, we need to gross it up while we are doing the problems on commercial securities under the calculation of income from other sources. And for the less tax commercial securities, if interest amount is given up, gross up. This is the first clause for the commercial securities under less tax commercial securities. Okay, and second clause is interest rate given, don't gross up. Just fix in your mind, anything under less tax commercial securities, you want to consider two things. One is interest amount is given or interest rate is given. If interest amount is given, just do the gross up and take it up. If the interest rate is given, don't gross it out, take it directly. Okay, this is the main treatment we want to provide for the government securities and commercial securities while dealing with the problems under the income from other sources. So I think you got with the table. So the next slide we look into the table government securities and commercial securities, and that we look into the 4 points: tax-free government security, less tax government security. And in commercial securities, we again look into two: tax-free commercial security and less tax commercial securities. So let me look into that. What are those? Tax-free government securities. These securities are issued by the state or central. It is fully exempt from tax under section 10 of 50. Okay, and the main point is what is it should not include in the total income. Okay, it is the securities issued by the state and state or central. It's fully exempt under the tax under the section 10 of 15, and it should not be included to the calculation of total income. This is the clause for the government tax-free government security we have. And the second point is less tax government security. It is issued by the government and interest on these securities are fully taxable without deduction of TDS. Less tax government securities are issued by the government and interest on these securities are fully taxable without deduction of TDS, and while providing the TDS or deductions, we have certain rates and which will be vary for one-to-one cases. So I will be explaining that in next class, and we come look into the third portion: tax-free commercial securities. These commercial securities, tax-free commercial securities, are issued by the local authority, statutory corporation, or a company in form of bonds and debentures. Okay, tax-free commercial securities or can be issued by local authority, statutory or corporation, or a company in form of bonds and debentures, and such interest what the securities are issued by the what the securities are issued by the local authority or statutory corporation or a company in the form of bonds and debentures, on such interest should be included in the calculation of gross total income. Have a deep clarification between the first and third point. In the tax-free government security, interest should not be included in calculation of total income, but in the third tax-free commercial security, such interest should be included to the calculation of gross total income. That is a major clause on the major difference between the tax-free government securities or tax-free commercial securities. So coming to the last clause, less tax commercial securities. Less tax commercial securities is issued by the company and tax will be deducted at source before paying any interest to the investors. So what happened here? Less tax commercial securities is issued by the company and tax will be deducted at source. Where at what time? Before paying any interest to the investors. Okay. For an example, if I am the investor in a company, in a company, I'm an investor. I want to get the interest amount of 10 lakh. I invested a 1 crore. I want to get the invested interest amount, sorry, 10,000 for this financial year. And what the company will do, they will deduct the tax giving my PAN card, and they will deduct the tax before paying the interest amount to me. If they are deducting TDS to me, it's at the rate of 10%, means they deduct the 10% in the 10,000, that means 1,000 they will deduct, and they will provide me the interest of 9,000, and again there's no and again in return there's there's nothing to pay from my side because I'm already paid to pay the tax my tax is paid by the company on behalf of me. So that these less tax commercial securities are issued by the company and tax will be deducted at source before paying any interest to the investor. Before paying any interest to the investment, they will deduct the tax of that interest before paying. That's the meaning of less tax commercial securities. Let me conclude this first part till here. In the next part, we look after into dividends, deduction available under income from other sources, interest on securities, and interest on securities we have the lengthy portion of theory for that. We will complete in that in next class, and rate of TDS applicable and common treatments to ascertain the income from other sources. This will be discussed in next class. In the third part, from the third part, we go for the problems. Okay, so be awaited for the next part. The next part will be uploaded on 24/2020 on 2:58 p.m. Thank you very much, guys.